What's up, everybody? This is Dominique Henderson, your CFP on YouTube, and I've been gone a little while, but for good reason. Today, what we're going to talk about is something that if you've ever wanted to hang your own shingle, I've got you covered. This is about those people that want to have the talk with their current employer about starting their own firm, and I'm going to give you the 10 considerations that I've been using with all my advisory clients to help them make the leap and start their own firm. Let's get started. Well, like I said, we're going to be talking about the 10 things to consider when starting your own firm. And just a little housekeeping, make sure you subscribe to this channel, and hit that like button and follow us on social media. We got all our things over there to the side. I want to get into this today. The first thing you're going to want to do is what? I talk about this a lot. If you watch me, you probably know already, but you got to establish your why, folks. If you don't know why you're doing something, if you've had a bad day, a bad week, a bad month, maybe even a bad year with your current employer, that doesn't mean you need to start your own firm. You might just need to reset some things, have some self-awareness work, go on. I've talked about exactly how to establish your why in this video. And if you check that out, I'm going to give you a rubric on how to do that. But let's just say if you need some direction here, two things. The first thing is, what do you love to do? The second thing is, what are you good at? Those are your your 2 points for contemplation, if you will, on how to establish your why. Now, remember, starting your RIA firm is, okay, you got to establish your why, but it's equal parts competence in financial advice and giving financial advice, as well as being a business owner. So those two things are not that easy to do together, especially when you're new. So you might want to think through why you want to start your own firm. What are some of the things that you would like to be doing? And that gets me to point number 2, which is going to be decide on the type of clients you want to serve. Now, this consideration is huge because it's not only going to dictate who you bring with you, more on that later, but also the type of clients that will fuel the growth of your firm and allow you to grow. If you're not thinking through the client journey from the standpoint of what does that client receive for working with you, then that's going to be a problem. You've got to establish that. And, it's kind of hard to think about all these things, I know, all together. But at the end of the day, your clients come to you for one particular issue, and that is for you to what? Solve their problems. Now, remember, your future clients are likely going to be the catalyst to grow your firm, right? They are going to be the type of people you want to clone because they probably hang around other good humans that you want to bring onto your firm. So it's going to be really good that you establish your why and you know the type of clients that you want to drive into your firm or attract to your firm in order for it to grow. Consideration number 3. Now, if you are a financial advisor and you haven't been eating your own cooking, shame on you, because you're going to have some really good cash reserves, or as my lovely wife likes to say, a sponsor. You will have business expenses in addition to your personal expenses. The problem is whatever form of compensation you're getting right now with your current employer is going to stop, at least for some time. So the point is you're going to have some margin, a little bit of cash cushion so that you don't have to be worrying about all the bills that you got to pay and the expenses that you got. And you can just fully focus on getting your firm up and running. So make sure you have that margin. Consideration number 4 is going to be start evaluating custodial relationships. Now, what is a custodian? Now, when your clients come to you, and most clients are going to expect you to be able to invest their money, have some type of wealth management platform that allows them to open up accounts, deposit cash and stocks and things of that nature so that those investments grow and you monitor those. Now you're going to have to find a custodian to do that. There's all types out there. I'll let you know that. And this video's scope is not to go into all those different types of custodians. I'll tell you on one end, you got to do it for yourself, which is kind of like how I am. If you have the expertise, if you have the knowledge, you can do everything from billing to building the models to doing the rebalancing and trading and all that kind of stuff, all the way to I don't really feel like touching that stuff. And those are called turnkey asset management programs, or TAMPs. You can look at those. There's several out there. You can even look at a solution like a Betterment. I don't know if they have a threshold on how much money you need to have when moving over accounts like that. But those are the kind of done for you, if you will. So do it on your own or done for you. kind of up to you, but at the end of the day, you do need to start to look at some of the different offerings that are out there for the type of clients you want to serve. Remember, this is all about the type of clients you want to serve. So you always want to be thinking about the client when you're going through the custodial relationships and any other vendors that you may bring on into your whole entity to serve your clients, because that's going to be really important. You don't want to have a bad relationship. The custodial relationship is one of the most important, especially if you're going to be holding client assets. Now, let's talk about business entity. You got to create a business entity. There's got to be, Dominique's Asset Management or whatever. There's got to be something out there. You may want to think about branding it personally. Or if you're thinking about some succession planning down the road, you might think about something a little bit more generic when you start to think about your business entity and your name, getting your tax ID and all that kind of stuff, right? So that's this step, right? You got to get all that, going so that you have the right formation. Now, and I'm not a lawyer, most RIAs, when you form them, they're going to either have to be a corporation or an LLC, a limited liability company, right? So you can't do sole prop as a RIA. Or any of the other kind of funky business structures or business entities that are out there. You're either going to be a corporation or you're going to be an LLC. Most people are going to be, either a single member starting off by yourself or maybe a multiple member LLC. You're going to have to check with your state on this as far as what is the actual business entities that they will accept. You can usually start with your state securities board. That's a really, really good place to start. They're usually going to have like a frequently asked questions or FAQ, something like that to get you started so you can know exactly what type of business entity is going to be right for you in the home state that you'll be filing at. Now you get to open up bank accounts, and that's the reason why I wanted you to do the business entity first, right? Most of these steps are in a particular order. It's not to say that you can't do 4 first or something like that, but if you start at 1, like I told you, you'll pretty much be solid. So if you start the business entity, then the next thing you're gonna wanna do is the bank accounts, right? So most corporate bank accounts are going to ask you at least for 2 things: that federal tax ID that we had you get in step 5 or consideration 5, and the articles of formation or articles of incorporation, sometimes they're called, that we got in step 5 also. So that's the reason why you do your business entity first, because you want to open up those bank accounts. It's cool to go ahead and start opening up these bank accounts because then you can start transferring money over, and those expenses that you're incurring as you build up your business entity and go down this track, it's going to be so much easier for your bookkeeper, CPA, or yourself to track what your business made and probably spent in the first 6 or 9 months when it comes to the formation. And all that's just real nice and clean when you start to do all your reporting and your financial statements, things of that nature. All right, this is a big one. I'm going to have to pause and put a little time on this one and kind of walk you through everything, because those documents are a beast. I won't even lie to you. So getting your firm documents, starting to draft those is going to be really key, and you're going to want a couple of key documents that every RIA is going to have. You're going to have your advisory agreement. That's going to be the agreement that basically governs the relationship with your client on how you serve them. The fees, the services, the cost, they're going to sign it. You're going to sign it. Okay. Things of that nature. Then you got your firm brochure or the Form ADV Part 2A and 2B. Not going to go really into that. I've done videos on those before, especially for my students inside my class. But the point is, that is the document that you will file with your home state and notice file for any other states where you have clients more than 5. That's above the de minimis rule. The structure of that is basically going to have a lot of the similar things that you see in your advisory agreement. However, this is the thing that actually gets filed with the Securities Exchange Commission if you're that big, or with your state securities board, right? So when somebody wants to look at the Investor Advisor Public Disclosure website, they're going to see you right there with your firm ADV there. So that's why this is so important. You got to get that down. Then you move on to your compliance manual. More of an internal document, but if you ever get audited, that's going to be a big, big key for how the audit goes, because are you following the procedures that you said you're going to do? Are you rebalancing accounts every quarter? Are you meeting with clients every year? That's what that document has. And you're going to have to attest to the fact that you or your firm employees are adhering to that every year. Okay. Then you're going to want to add a privacy policy, which I've actually combined mine inside of my advisory agreement. That just shows how you're going to be using your client's data, where it's going to live, how you protect it, things of that nature. Then you move on to the code of ethics, right? What are you going to live by? What standard of morality, fiduciary responsibility as an RIA do you have to your client? So those are the key documents, and I know it's a lot. And here's the point. Watch out just getting somebody else's template off the internet. You're going to have to go through this word by word, line by line, because these are essentially the legal documents that are going to govern your client relationships, and you're responsible for what's in them. So just, I'm just saying. All right, 7 down, 3 more to go. If you're tracking with me and you haven't raised any red flags at this point, kudos to you. You really shouldn't have. But again, I'm not an attorney. You're going to have to make sure that you do this with your own level of due diligence and make sure that you're, crossing your T's, dotting your I's. Okay, let's move on to consideration number 8, which is going to be inform your existing clients. Okay, now this is where it can get kind of sticky because in some instances, when you join a firm or a broker-dealer, you are going to sign what is called a non-compete. And this is the document that governs how separation happens. This can be kind of tricky because if you signed a non-compete when you signed up with your broker-dealer, you probably want to involve an attorney because that non-compete definitely governs how you can separate from the firm, how you can contact clients, all that kind of stuff. At the end of the day, I'll let you know this. Clients can move their accounts wherever they want to, and if you've been doing a good job for them, they will most likely follow you. All right, now, here's the hard part. Inform your client or inform your employer about your wanting to leave, your willingness to leave. Now, this can be pretty sticky, but I will let you know this. There's probably going to be this much time between the time you inform them and your U5 being updated. Now, here's the deal. You got 3 statuses on this. There's going to either be the voluntary, which is going to be no harm, no foul, as far as your resignation, voluntary, or there's going to be involuntary, I can't talk today, involuntary termination, where there's going to be probably some type of form that you need to fill out with FINRA that says what happened here. That could be a negative impact. We'll talk about that in just a second. And the last one is permitted to resign, and that's also good. So all the first and the third one are what you want to aim for. At the end of the day, if you happen to be in the position where you have to find a job, maybe this doesn't work out like you thought, that second status could harm you. And so you really, really want to make sure that whatever is filed on your U5 is okay for you to continue on in life. If you're going to start your own firm and that's all you're going to do, you don't really care what they put on there. Although you do want it to be, since it is public record, you do want it to be the right thing. So make sure you check out that, okay? And if you haven't figured it out by now, you're going to have to hustle. It's time to get your hustle on, okay?
Can I get an amen?
Yes, you can. You're going to have to get your hustle on because it's time to go get clients. You're up and running and you want to go balls to the walls, fully focused, whatever you want to say. That's the way to do it because at the end of the day, your clients are out there waiting for you, okay? If you need help with this kind of stuff, I'm here for you, okay? Email me at hello@Jumpstart Coaching Lab and make sure you put in there start my firm or something like that so I know what you need, what kind of help you need, and me and my team will evaluate your situation and see how much we can help you. All right, that's it for now. We'll see you back next time. Make sure you check me out on these social media channels and check out some of the videos that we got inside the Jumpstart community that may help you get to the next level. We'll talk to you later, friend. Bye-bye.